Hello, everyone. So I'm going to talk to you today about the global EV market, and what we've seen here is that the slides have moved quickly, but the three things that I was asked to discuss was electric vehicles, charging infrastructure, and batteries. So if we think about where we are today, what an interesting time to talk about this market, and this is just Trump in front of the White House just yesterday with Elon Musk. So things are changing, the politics is changing, and it's an interesting time. If we think about the car market as a whole, you've got the ICE vehicles starting to be eaten by the battery electric vehicle market. And this has happened since 2017. So this is a big change for all of those automakers, and some of them are handling it better than others. What we've seen is about 17 million EV sales last year. This is battery electric vehicles and plug-in hybrids. It's about a 60-40 split, but it's not the same in every market. And we think this is going to grow again this year. So despite all the headlines, actually we think about 30% growth, even in regions such as the US. So the US has a $7,500 incentive scheme. It's a tax credit. It's not necessarily available to everybody. Trump is after that. Some of the things that they've put in place is looking at actually like $1,000 tax when you buy the vehicle. So they're trying to flip it, despite him being stood in front of the White House there selling EVs. But we still think growth, and what we've seen in many markets is these incentives, when they get dropped, then the consumers rush to buy these electric vehicles. The US also quite interesting in that it's been very heavily dominated by Tesla. They've been maybe 80% of sales if you look back 5 years ago, whereas last year on the BEV market, what you saw was then become less than 50%. Some of those other automakers now actually starting to get market share, bring models that are competitive within that scheme. China on there, you can obviously see a huge part of the market. One of the interesting things last year is that they sold a lot of e-revs. So these are like the big battery cars that also have a small engine as well. And they've proved quite popular, which we've not seen in every single market. And then you've got Europe. So you can see on here, as I talked about, China over 50% share of sales being EV. North America about 10%. Europe 25%, so still pretty successful. But if you look across that line, it's actually stagnated quite a lot last year. Some of this is very heavily dominated by Germany. So in the same way I talked about US incentives, they dropped the incentives last year, and then therefore there was a bit of a rush, and then there was a big plateau in the sales. And because they were one of the biggest markets in Europe, that affects the European figures. So the line doesn't necessarily reflect every market. The thing about Europe, though, is that they had the fuel economy regulation coming. So some of the automakers would have known this fuel economy regulation was coming. They're preparing, but there's a reason why 2024, for example, is a little bit flatter than some of the others. So the fuel economy regulation basically says that you have stricter tailpipe emission standards, and 2025 was a year it was going to drop. Slightly simplistically looking at this in terms of how many BEVs or PHEVs that you need is somewhere between 30 and 40%. Now, these legislation actually have rules around the CO2 emissions. So if you've got hybridized cars, you're probably closer to it. If you've got cars that are not necessarily as heavy, sometimes the rules have basis for that in it as well. So it's more simplistic, but what you find is like companies like Toyota may be closer to it, although not producing as many EVs, whereas some companies like Volkswagen, maybe there's many EVs, actually have quite a hard time meeting these targets. And because some of these companies have a hard time meeting the target in 2025, they've done their fair share of lobbying. And between the lobbying, what happened last week was the EU Commission said, don't worry about 2025, we're going to push the fines back to 2027, and you can then sort of aggregate the 3 years. Now, the worry, if you're a skeptic, is that they wait until 2027, and then they just lobby again. So you have to think about whether that's the right thing. The EU, though, has said that they're going to try and incentivize the market more, corporate fleets especially being one of those areas. And we've seen that be successful in the UK, obviously, as one of the biggest parts of the market. Now, the start of the year has been strong. In many markets, including the UK, EV sales have jumped. And this is because some of these investments the automakers put in for 2025, they didn't know whether their lobbying was going to be successful, have then started to come to fruition. And I can understand as well why the EU would have changed this. What they don't want is multi-billions of fines going from automakers like VW to their Chinese counterparts. It doesn't really work when you're set as a policymaker to keep jobs in Europe. So it is understandable. When you look at the Chinese story, and sorry, this slide is a little bit busy, but we're actually seeing over 50% adoption in the market, and that is huge. What that's actually leading to is road fuel peak. So now the oil industry is really facing a change in what's happening in that market. What you're seeing, though, is it's not the same in every single city. So this is showing you some of those that have heavier adoption than others. And I was in Shenzhen last year, and one of the Chinese said to me, maybe not in quite the northern way I'll say it, but my nan could build a car here. There's so many suppliers. And there just really is. You go around, there's car manufacturers you've never even heard of with a shiny new car that has a brilliant range. We just heard about the van and truck market. It's not as big as the passenger vehicle market. So I think about 30,000 EVs, vans and trucks in the US or North America, about 130,000 in Europe, and somewhere in the region of 440,000 in China. And that compares with the 17 million that we saw before. So smaller market. If you look at the share of sales on these slides, you can see a difference between the vans and then the trucks as well. So it is pretty small. Because it's small, then you start to have challenges with the costs of these things and the batteries. If you can't negotiate on a big scale, then no wonder it's going to be a lot. So I've got some more slides on battery prices. But when you see a big divergence between what you pay for batteries in trucks and what you have in passenger vehicles, and we think that will close over time. There is legislation on fuel economy here as well. So in Europe, it's about 30% adoption needed for trucks in 2030 and about 60% in 2035. Who knows how achievable that really is. So this is a factory in Hungary. SK have built one. I'm not sure it's a joint venture or not. And what you're starting to see is this is very, very political. Where are the factories going to be built? Where are the jobs going to go? As I said, I was in China, and near Tiananmen Square, they have the flag, Chinese flag, and the flag of whoever is in town at the time. And it so happened to be the Slovakians were there. And then as I get on the plane home, or the next day, I remember reading, and what they'd done was they then voted against what the EU wanted in terms of Chinese tariffs, because they want to keep on side of the Chinese, and they want the Chinese companies to come and build joint ventures within their country. So this is very political. What we've seen on pack prices is that these have dropped quite dramatically. The magic $100 per kilowatt hour number has actually been hit in China. So the average here is showing you the global average, but what you see is sort of a 30% difference between the Chinese suppliers, North America and Europe. We actually saw Europe behind North America last year. Some of the cost drop is because people have moved to LFP chemistries, which are cheaper. Some of the cost drop is because of manufacturing capacity. What we've seen in China specifically is just huge overcapacity, somewhere between 3 and 6 times overcapacity within the market. The big players are being utilized in their factories about 70%, but some of the smaller players are only about 25% when we've looked at this. So we expect some of them will go bust, but a lot of them are then trying to export, which is obviously a challenge. The reason why there's obviously some spread on what we think this year, there's a huge amount of tariffs coming into the market. Some people are applying them in different bits of the value chain, and that's a challenge. Now, broadly, how this works and how we forecasted it is a learning rate. The learning rate works such that a doubling in cumulative capacity it then applies to the learning rate, which is 18% drop in the price. So you can see here where that learning rate goes. Whether we're correct or not does depend heavily on some of these things like the tariffs. But to give you a perspective of somebody who's really in the weeds, this is Kirk Kelty. He runs the battery team at General Motors. And we're saying they dropped $60 per kilowatt hour of their pack last year, and they expect another $30 per kilowatt hour this year. And these are quite big numbers. We're talking like $5,000, $6,000 per vehicle that they were saying that they could manage to achieve. So this is really happening. And what was quite interesting listening to Kirk Kelty speak was that even with the Trump administration coming in when he was talking in February, he was actually very optimistic. They've made multi-billion investments to do this, and they're learning fast about how the industry works. But there is the Chinese, and if you think about global capacity, there may be 70% of everything that's gone in, and we already heard about Northvolt going bankrupt. If you look across our list of projects that you've got, and just with an eye, you get a feeling that the ones at risk are the ones that aren't joint ventures. Many of these companies have been trying to do this for sort of 2 to 5 years. Many of the South Koreans, the Japanese, and the Chinese have been doing this for 30 years. And certainly the experience from those joint ventures is helpful. So this next section is on charging infrastructure, and I thought I'd show some pictures from the Chinese trip because everybody likes a picture. So this was within quite a small space, and you saw a Tesla charger, obviously incredibly well branded, a set of Porsche chargers, and also XPeng. What's interesting is when you look across which ones were full and not, it does slightly depend on price. And just around the corner was a taxi rank, and it was just, I'm trying to think what it'd be in the UK, about 10 cents per kilowatt hour, which is incredibly cheap, and they were all full, every single one of the chargers in that station. So price does matter. In terms of the Chinese network, what's interesting is fast charging is cheaper than slow charging. So you can basically save money anywhere. Now, one of the things that we hear is obviously charging infrastructure is the reason why people aren't buying EVs. There's not enough of it. So this slide is trying to just give you a perspective of how the vehicle fleet has grown and how the chargers have grown. And I apologize, I didn't get around to changing the Californian one to the UK, but I can talk to it. So on electric vehicle fleet, it's actually grown about 30% last year. So more market for those charging networks. If you look at the public charging network, actually in Europe, it grew more than the fleet last year. So that it was pretty successful for all the talk of what's going on. Obviously, some countries different to others. The UK not doing so well. So I think Germany was more than double to triple, depending on how you look at the numbers from what the UK did. And we certainly don't have as many incentives. So the EU Commission has a scheme to put chargers across all the motorways called the 10T network. It's about 20,000 to 30,000 euros per unit that they give. So every charger going in, they will give that amount of money. The UK obviously announced this big fund, about $1 billion, and we've not seen a lot of that money come to fruition yet. One of the other things that we're seeing is these tender schemes, quite successful. The Belgians, the Netherlands, Germany trying to follow it as well. What they do in the tender schemes is the government says, here's a tender for, say, 10 years, and the operators actually now know they'll make money. So the government then makes money, 5 cents per kilowatt hour, that's distributed, but they put terms in. Should these chargers be used too much, build another one. And they make sure that that's available and they make the connections. And I think we're a bit behind that in the UK. If you look at network power, though, a lot of these chargers going in are really high-powered, much high-powered than they were 5 years ago. So the network power is actually growing much faster. So positive story, despite all the headlines, really, when you look across it. In real terms, the US on that picture was obviously behind, and you can see that through the numbers as well. Just 40,000 installed last year. We think in the next 5 to 10 years to keep up with the pace that the industry wants, it needs almost 10 times the amount. The EU quite good, and the EU here actually does include the UK. 265,000 last year, and the growth looks doable to get to where we want to be. The difficulty obviously comes with the specifics of where the charger is and how well it's done. The Chinese, they've actually installed less last year than they did the year before, and we don't think they need to install that many more. Some of the challenge, again, is overcapacity. And those companies are starting to try and export. So you think you've got the charging operators out there, but you've got the manufacturers. And some of their solutions are actually managing to get into the European and the US market. Previously, I think people were pretty scared of those, but not sure anymore. So the next few slides are market pains and gains. Here's a kind of personal one. A couple of chargers on the motorway as you head out of London up north. And what you can see is these are 180 kilowatt. Everybody's advertised. You can get this high power charging, the charging operators, the vehicle manufacturers. But if you look at one set, they're getting about, one of them's getting 90 kilowatt, one of them's getting 60. If you look on the second charger, one of them's getting 90 kilowatt and one of them isn't even working. And I didn't knock on the door and tell him, but the one that isn't working does reflect what's happening in the industry, which is about 30% when you look at this Kempower study that was done recently of the sessions fail. There's a guy from Monta who's the CEO there, and he often puts the statistics. And even the best networks have about 10% failures in the market. So things like plug and charge coming to try and make this better, but certainly some challenges. When you think of a consumer, he wants to turn up, he wants to know how long it's going to take. And if you think it's 180 kilowatt, but it's actually 60 kilowatt, that makes a big difference. So I think there's a big marketing push on just making it easier to know what is actually happening. From an economics perspective, higher power charging is better. On average, these chargers are probably only delivering about 70 kilowatt. We think this can go to about 150 kilowatt in the next sort of 5-10 years. And that means they can deliver more energy. So they're about 200 kilowatt hours today they deliver on average a day. They can probably get up to about 600 kilowatt hours a day. And we have seen that on some networks, and that makes the economics better. That can help the price go down. When we think about pricing, what we've seen is that prices have actually risen for fast charging in many markets. This is more expensive than gasoline. In the UK, it's probably about 1.5 to 2 times more expensive. And you can see it's one of the worst on the chart. Some of that is blamed on grid fees, which have changed. Some of it is probably that these companies want to make some profit. And if the consumers still go there, they're not going to lower the prices. What we have seen in the Scandinavian markets is that the prices have actually dropped. Some of this is competition. As the competition comes in, they realize that they've got to lower the price. Now, this is a Circle K station. It arguably is the future. It's got petrol, it's got chargers, it's even got a truck charging there. Round the back, there's 2 networks. There's also Ionity, so they're making some extra money. Despite all that snow, there's no cover, which is one point. But there's just a small retail store. So whilst this is pretty good, it's got retail. A lot of charging sites don't. And if you think about fuel stations today, they make 50% of profit or more based on selling stuff in stores. So difficult for some of those charging stations who don't have any amenities. But what it does point to is stores that are bigger and stores that can sell stuff. And one of those is supermarkets, already very good at selling fuel. And they're probably going to sell lots of charging. We've seen Sainsbury's come in the UK, and we see the likes of Walmart in America. And what these do is they take less margin. So they lower the price. Here's a little example, and they're cutting below what everybody else is charging. This is good for the average consumer. They know where it is. They know what power they're going to get. They probably go there once a week. And if it's cheaper, maybe they can get it down to the price of gasoline. Other things that can drive the cost down, pure scale. So Tesla last year delivered 5.2 terawatt hours of energy. Ireland is about 30 terawatt hours. I think Amazon, Google, some of those big companies are around that scale as well. Because they're buying such quantities of energy, they can then negotiate a better price. So some of them are doing it in different ways. One of those ways is power purchase agreements. Electrify America here, that's a real picture, has done a power purchase agreement for this huge amount of solar. And one of the reasons that they would also do green energy, not just because they want to sound green, but is also because they can make money from things like carbon credits. So in California, they have the low carbon fuel standard. Broadly, what that's doing is saying, we want to lower the emissions of fuel on the market. If you're over our emission level, you generate deficits, probably gasoline and diesel. If you're below it, you'll generate some credits. Now, these schemes exist in many markets across North America, but also in Europe. So in Germany and the Netherlands, and in something called the Renewable Energy Directive 3, they will exist in every member state, or should, this year. And what they're doing is including electricity. So this is maybe 5 to 10 cents per kilowatt hour that these operators can make, can be around 10% of revenues. In the UK, the RTFO does not include electricity. So despite the government wanting to go electric, they're actually incentivizing biofuels. So they had a consultation on that, and I think it's an obvious win for the industry. Going back to where the UK is doing well is off-peak home tariffs. So despite, if you look on a yearly basis, something like $1,000 if you just charged on fast charging networks, you can actually save over $1,000 a year if you're on a dedicated home tariff. And there's more tariffs probably coming. So we track lots of the power markets, and I thought what can show what's going on the best. With the volatility coming, one of those is negative power prices and a change in the price of energy depending on the time of day. This can feed into just a totally different type of network and relationship between the transport and the energy industry. One of those more advanced things that we hear about is bidirectional charging. We've done quite a lot of studies on that. What I will say is if every vehicle was doing bidirectional charging, it would be too much capacity for the network. The reality is something like 10 to 20% is probably more economically viable to not saturate the revenues that are available. There's a scheme in Utrecht, 500 bidirectional cars being rolled out with Renault, and they say that would be 10% of the flexibility needs of that region. Well, that region has 500,000 people, so just 500 cars, in theory, if you rolled out 5,000 cars, could meet the needs. I've got 2 points, and I'm slightly over the time. But the truck market obviously came up, and we're talking about TCO. We did a study, this is North America, but it does apply elsewhere, on a theoretical 20 megawatt truck charging station, and we looked at the various utility tariffs that are available. And the makeup of those tariffs and the region you're in very much varies whether this is viable or not. So you can see BC Hydro in Canada, nearly half the price or less than some of the other utility tariffs. And whether you can put battery storage in or do other things depends on the makeup. So the fee is $1 per kilowatt hour and $1 per kilowatt, the peak demand charge. And some of those can be $2 per kilowatt, and some of them can be $25 per kilowatt. So there's a lot of thought there. So I'm not going to take any questions, but I'm just going to list some of the things we're thinking about this year. Trade, what's going to happen with the tariffs. The UK actually quite well positioned because we've not tariffed like the EU. Incentives, who's going to bring them in, who's going to get rid of them. Technology. We do talk about the EV market and we don't get into it that not everybody can be a winner. Some people's cars just aren't very good and they probably shouldn't be getting subsidies and they probably won't win and we can't subsidize that forever. And then some of the macro factors at the bottom. Metal prices have been quite low. Maybe they're going to rise. So lots of change, lots of politics. What a super time to be involved in the industry. Thanks for listening and I'll be at lunch.